He will be here Tuesdays during market hours at this time and Thursdays after market hours. So for whichever you prefer. But you don't have to come to live help. It's just live help. You also have him in community kind of whenever you want, ish. And I'll show you how to do that. Actually, he'll show you how to do that. So if you just like rather just chat rather than live video, that's fine. This is simply a service to you as our members. It's not an obligation. There's no test. You don't have to be here Tuesday and Thursday to get the full benefit of Trade Machine. Not at all. In fact, if we're doing our jobs, you will never have to be here on Tuesday and Thursday soon enough because you'll know everything. But we're here for you just in case. Okay, so I'm going to start with a, yeah, I turned it on. Thank you, Kat. I'm going to go to a short slideshow as I always do because foundationally with trading, before you talk about it, you just have some kind of groundwork. It's short. Then I'm going to go into Trade Machine. I'm going to show you something different than last time. Then Max and I will come back and do live Q&A. If you have any questions, please feel free to ask. Don't be embarrassed. We will not read your name if you don't want us to. So if you have a question, you're like, because the questions can be anonymous if you only send them to panelists. But if you don't want that, then you can email or you can ask Max in community as you wish. This is not meant to put pressure on you. This is just meant to help. So having said that, I am going to share my screen. I'm going to turn off my video. Max, go ahead and turn off your video too.
I think I did.
I think you did too. Okay, can you see my screen?
Yep.
Awesome. Okay, I'll go to the slideshow and off we go, guys. First, some disclaimers. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. This is not a solicitation to buy or sell any security ever. This is not advice, and past performance is not necessarily indicative of future results. All right. So I'm going to continue with this almost every time I do a presentation because I just think it's necessary. So to be a successful trader, we're not talking about how we did on Tuesday or Thursday, certainly not how we did on Tuesday because I had my worst trade ever today. You want to focus on the long arc of a career, right? So not a day, not a week, not even a month, and to tell you the truth, not even a year. And in order to do so, you will need three things. It seems like you will only need one thing. But since we're humans, you need three things. So if you were a machine and not a human, this is all you would need. Process, which in trading we call a plan. And Trade Machine is built for this. Trade Machine is exceptionally good at this, right? It's what to trade, when to open it, and when to close it. Okay. Hypothetically, that should be enough to be a successful trader. If you can get your process right, then that's it. What to trade, when to open it, and when to close it. That's all you need, right? That's it, right? Unfortunately, it's not right because we are, bless us all, humans. And since we're humans, we need something more than just the process. The first thing we need, in addition to process, is patience. Okay, and that's in your plan and yourself, because as much as we want to be successful traders across the long arc of our career, your trading career is not a sprint. It is not a sprint. And there are a lot of services there that will tell you that it's easy, that it's fast. Within a month, you'll be making profitable trades. You won't. And if you did, it was luck. And it would probably be bad luck because if you have a really good first month, you're probably going to feel more confident, put more in, and then lose even more. So you're going to need patience in your planning yourself. Now, Trade Machine can help with patience, but ultimately this is personal. For some people, patience is a lot easier than others. This is very personal. For some people, this second bullet point is like, yeah, I'm a patient person. You got it then. You got it. For other people, it's not. And the last thing you'll need is effort. And that's why those ads on YouTube and stuff you see, they're either intentionally lying to you or they just don't know. They're not professional traders. They just don't know. So the thing about effort is this, and this isn't really just for trading. I'm just here to talk about trading, right? Max and I are here to talk about trading, but it's not just about, this is for life. So First thing is it will probably be harder than you think. Sorry, I know the videos on YouTube say that it will not be harder than you think. It will be. If you're going to get this bullet point, successful trader, it will be harder than you think. It's not a maybe. I don't think so. I bet my life on it. Sorry, those videos on YouTube are not right. But there is good news. Since it will probably be harder than you think, it will also probably be more satisfying than you think. Right? So that's just the truth. If you don't like the truth, don't like my truth, or don't want to hear that truth, get off the webinar because I don't want to waste your time. You don't have to listen to me. Who am I? I'm nobody to you. It's okay. It's allowed. All right. So to focus on the long arc of a career, you will need process, patience, and effort. We will be focusing with TradeMachine mostly on process. We'll take a lot of the effort out and we'll help with patience, but we're going to crush process. That's going to be really, really good. The personal stuff, what can I do? All right, so the last few sessions, we looked at when a stock has dropped and may recover. And with that, we did the spread the sell-off plus AI. I'm going to redo that one, by the way. So next Thursday, we're going to redo that one. I don't feel like I did it well enough. I didn't give it its proper due. It's a little more complicated than I didn't offer enough of an explanation. So if you're wondering what we're going to do next session, before we move forward, I'm going to review that one, kind of a redo. Okay. We looked at tech, stocks, and financials with that one. We also did the one after that. We did buy the sell-off, which is also when a stock has dropped and may recover. Okay. And that's when we looked at buy the sell-off plus AI. It's a less complex strategy than spread the sell-off. And in that one, we looked at the NASDAQ 100 financials and healthcare. And then in the third session, which was last Thursday, we looked at pre-earnings momentum diagonals, call spread plus AI. So that's actually when a market is going. So the first two were when a stock has dropped and may recover. This is when a stock is already above the 50-day moving average. In other words, things are already going well. Well, how do we know when it might continue to go well for a certain period of time? And we looked at tech, financials, and healthcare. And we also looked at multiple time frames. And the reason I'm doing that is these education things are building. I'm going to just scrunch everything on the screen. Nothing's going to change. Is you need to look at multiple sectors and multiple time frames to really get your process. You remember your plan. Remember that process, patience, and effort. That process part. That's really how you do it right. So this session, I'm going to do fade the dip plus AI. I'm going to do tech, financials, and healthcare. I'm going to do multiple time frames, but there's something I'm going to show you this time. I'm going to show you when something does not work. Okay. It turns out I am not going to do this trade in 2024 for tech. For financials and healthcare, no problem. I'm actually not going to do this trade for tech in 2024. But I have to show you why. So you can do it yourself. And then I just want to point out, as I said at the top, I am going to go, we're going to revisit this. I didn't feel that I did well enough for you. You give me the privilege of your time, and I don't think I returned the favor. So next time I'm going to do this again. And I apologize. I just, sometimes I'm not at my best, and I've gotten the feedback. And in general, the feedback on these things is like off the charts. The feedback on this was kind of lukewarm, and lukewarm to me isn't good enough. It's not good enough for me. I want to be better than lukewarm. All right, so that's it. Let's go to TradeMachine. All right, so we're going to start on the backtest tab as we normally do. Okay, and this time we're going to go, just like we did with every other session, we're going to start with these saved backtests. We have added this capability to the backtest tab just recently so that you don't have to move around the application and go to different tabs and figure out how to load strategies. It just should be in one place, and it is. So as I said at the up front, we're going to do fade the dip with our AI. So what you do is you select it from the drop-down menu. Right? I'm going to get out of the drop-down menu and show you again. I just clicked Save Backtest. Okay. Fade the dip plus AI. That's what we're going to do today. We did this one. That's the one I'm going to redo. We did this one on Thursday. And we did this one after we did the 1x3x2. Okay, so today We're just doing this one. So you click it, and then you just click load, and just wait a second. Let the backtester do its thing. It's fast. It's going to load one ticker, and that's it. The first thing you do after you see this is hey, wait a second. This isn't recent. Today's December 26th. So click 3 years to get everything to the present. Okay, now the next thing we added to TradeMachine is portfolios. They were always here. We just never gave you saved portfolios. So you can have as many portfolios as you like, but every TradeMachine member now has this. Okay. NASDAQ 100, Dow 30, and then sectors, financials, tech, utilities, basic materials, industrials, healthcare, energy, everything, okay, down to software. So I'm going to let this load, but first I want to talk about what the strategy is. Okay? This is a put spread. It's getting short a put spread, and it's getting short a put spread at certain times. First of all, it's never trading earnings. Never trading earnings is pretty simple for TradeMachine. What that means is no matter what trade is open, no matter what's going on, if that button is clicked, then 2 days before earnings, all the way through 2 days after earnings, so this like 5-day period, it's just a blackout period. It's like when you buy things with points on your credit card and you can't buy airplane seats. So it just this 5-day period, trades are ignored. And if a trade opens before, it just closes early. That's it. This is never trading earnings. And then there's a technical open. Okay, so we're getting short a put spread no matter what. We're not trading earnings. And then there's a technical open. This happens at a specific time. And what is that specific time? What is fading the dip? Click technical open and you'll see it. The first thing we'll do, so it's 1, 2, 3, 4, 5 things are required. And these are ands. So this and this and this and this and this. If all 5 of those are satisfied and it's not during earnings, boom, trigger. Okay? So here it is. The first thing is the stock price, has to cross up through the 200-day moving average. And if you just take a second to think about that, if the stock is crossing above the 200-day moving average, that means yesterday it was below the 200-day moving average, right? We're waiting for the day the stock crosses above the 200-day moving average. That means yesterday it was below. So this is a stock that is recapturing its 200-day moving average. To me, a stock is in technical failure if it's below the 200-day moving average. And so in this place, for this first condition, we're waiting for a stock to cross out of technical failure. But that's why we're calling it a dip, right? Even though it's rising, the stock had been in technical failure. Number 2, the stock has to be above the 10-day exponential moving average. This is a short-term moving average. So the stock is crossing above the 200, went from technical failure, coming out of technical failure, has some short-term momentum. It's above the 10-day moving average. This simply says the stock cannot be overbought. This is very, very, very rarely going to be the case if a stock is already below the 200-day moving average. But just in case, we don't want to get long anything if it's overbought. These last 2 are our AI. Remember, this is fade the dip plus AI. Okay. So this is that the 1-year skew is above 0. If you don't know what these are, that's okay. This is not the time for us to explain that. I will show you a video in 8 minutes where you understand what our AI does. But for now, I'm just gonna read it to you, and I'll let you examine further what our AI is if you like. Okay. And the 1-year kurtosis is above 1. Okay, so stock is coming out of technical failure. Stock has some short-term momentum. Very rarely going to be a concern, but stock is not overbought. And then a couple of AI things. You can think of it as like AI1 and AI2 get the check mark. Okay? Those are the technical good. That's when this thing happens. It's a short put spread. It never trades earnings, and it gets triggered when all 5 of these things happen. Okay. When I click save, it's going to rerun the whole backtest. That's okay. We got time. For those of you that are annual members of TradeMachine, you will have a faster backtester. That's why you see mine coming in so fast. But also your portfolios, you can test 200 stocks at once or fewer, but up to 200. If you're not annual, this is going to stop at 50. That doesn't mean you can't test the other 50, the NASDAQ 100, 100 stocks, and you got to go do that. But for an annual membership, it's called a platinum membership. You get a faster back tester because we can reserve instances in Amazon ahead of time, which allows us to save money on infrastructure. So we can provide you that extra speed. Okay. And you're going to get up to 200 tickers. So I'm going to let this run. And what we're going to end up seeing is how this fade the dip, this thing, this technical open short put spread, how it did in tech over the last 3 years. And in general, we want to look at multiple time frames and multiple sectors. Okay, so we're starting with one time frame and one sector. Okay, look at that. This is why win rates aren't particularly exciting to me. It's actually easier for me to mark this up. So I'm actually going to oddly take a screenshot and start drawing on it. The win rate is great, right? Hey, 175 wins, 74 losses. Awesome. But look at this, guys. This is a 1 month trade, up to a 1 month trade. It's basically paying your commissions at best. 1%? Why would I want to do this? Now, as I said on the last training session, of course you can go here and find the companies that have done the best. Look at companies that did awesome. But that's not good enough for me. In order for me to take alerts on a certain trade in a certain sector, first I need the entire sector to be doing well. Because otherwise I kind of feel like I'm getting lucky. Like it worked for Microsoft. Was that luck or I don't know. If the entire sector works, then I feel really good about this strategy in the sector. But if it doesn't work, I'm going to skip it. So this is why I told you at the beginning, all of my fade the dip triggers for 2024, I'm out. I'm going to do fade the dip in other sectors, but for tech, I'm out. You don't have to do that. You can say, hey, no, I want to order this by average trade. And I want to look Adobe. That's awesome. 2 wins, no losses, average trade 37%. Microsoft, like that's up to you. I'm telling you what I do. This is a part of my process. This is a part of my effort. Okay. Now, did I show you the strategy just to show you we're not going to do it? No. I always start with a NASDAQ 100 because I like trading tech, even though it's not all tech, and I like trading liquid names. Let's go to the financial sector. The reason I like to do at least 2 sectors is for a very specific reason. If I have a bunch of alerts set up on one sector, and they're all, I don't know, they all get triggered when stocks are recovering. Well, that means in that case, in a bull market, when things are going well, I'm never going to get any alerts, right? It's all in one industry. The entire industry is moving up. Well, I won't get any alerts because they're not falling apart and recovering. They're just rallying. So I want to make sure I want TradeMachine to work for me, right? So in order to do that, I need to look at other sectors which might be doing differently than another sector. So financials and tech don't necessarily move together. So let's look at financials. So I'll click XLF and it's going to do the same rigmarole. 3 years, it's going to go through all of these, the exact same strategy, just going to look at tech and we're going to let it go. You can see some names I'm sure you're familiar with, Berkshire Hathaway, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, right? Goldman Sachs, Morgan Stanley. You know these names, American Express, Schwab, the CME, PayPal, you know these names. So let's let it load. Remember that tech had a grand total return over 3 years of less than 1%. It was actually 0.98. So let's see if financials are any better. This is at a maximum of 30-day trade because it's 30-day options. But if there's a 50% gain hit, it just stops out. So this average trade is probably about 2 weeks. Okay. All right. So how do financials do? Look at that. The win rate is almost identical, 71%, but the average trade is 7%. Now, is this good enough to do? This is one where I'm not sure. So since it's not a no, but it's not a yes. Since I'm not sure, this is when I go to multiple time frames. That was 3 years. Okay, well, how did it do in 2023? Right? If it didn't do better than this in 2023, I'm out. But if it did, if we're looking at double digits, okay, I'll take them for 2024. Right? So this to me is dubious. Not good, not bad. So let's do 1 year. It's the same strategy. It's on financials. I'm just looking over the last year, and you can see the dates right here, right? Same names. Again, I know that the full 3-year picture left me with, I don't know. Possibly, but possibly not. So let's see what we get. And
Ophir, you want to, would you mind defining 50% profit, what that means when you sell a credit spread?
Sure. So if you're selling a credit spread, let's say you receive $1, the 50% profit is hit when that $1 you sold goes down to 50 cents. So you sell it at $1, you can buy it back for 50 cents, right? Then you've made half. That's how TradeMachine does it. It looks at the percentage of the credit.
Thank you.
All right. So here's how it did over the last year. The win rate was a little better. And the average return, let's call it 10%. Now, for me, getting 10% on a credit spread consistently with a 75% win rate, that's fine. I'm okay with this. This kind of qualifies as like, okay, let me look at the best of breed. I don't want to do it in every company, but now I'm willing to look at the best ones. If this was in the 7% range or below, say, I'm kind of out. My number is usually about 10%, so I'm going to say this qualifies. Just barely, but yeah, it's close enough. I'm in. I like it, especially considering the win rate. So I'm going to sort by average trade return, and let's see who did well. These are all based on 1-year trades, but so I might like these, right? I'm just checking the ones I liked. Probably JP Morgan, probably AIG, Citigroup. Hey, I'll take that, right? PNC is a regional bank. So good to me. Prudential, the insurer. So let's say I liked these trades. I'm going to go to add alert. The technical conditions are already there for you. Remember, it says the day that it's the day the stock crosses above the 200-day moving average, which means yesterday the stock was below the 200-day moving average. The stock is above the 10-day moving average. The stock is not overbought, and our 2 AI things. Right? Here are the tickers that I checked. And here my notes will be fade the dip plus AI. And I'll just put, and I'll just put in parentheses financials, just so I know what I'm getting. When I get it in my email, I'm like, what is this, a financial trade? Okay, got it. Now I'll just add the alerts. So 9 alerts are created. I know that in the back, TradeMachine is working for me. It's checking the market constantly. And when all of these technical conditions meet in those 9 companies, if in any one of those 9, I'm going to get an email that says, boom, it's live. Okay. Now let's look at one more sector. Let's look at healthcare. And I'm going to look at 3 years first. And so we've looked at tech. Tech was a no for me. Just wasn't good enough. A plus 1%. I don't even want to know what it did from the last year. Financials were close, and I took it. Close, but I took it. Let's see what healthcare does for us. And healthcare names you'll recognize, right? Eli Lilly, J&J, Merck, Pfizer, Amgen, Bristol Myers, Gilead. Right. So these are names you should know. CVS. So there's some familiarity with these names. Humana. Right. Biogen. So let's just let this go through it. All right. Now look at that. Remember, tech was 1%. Financials were about 7% over the last 3 years. Look what we have here. Now that, and keep in mind, the win rates are between 71 and 74%. Now that's what I'm talking about. That's what I'm talking about. Now this looks good. I'm willing to choose the best of these. I'm willing to choose the best of these. So I'll sort it by average trade. Gilead's bananas. 8 wins, 1 loss. EW, I'm actually okay with 2 wins, 1 loss. IDXX, MD, this 1 win, no losses. HCA is 2 wins, no losses. Agilent, right? 4 wins, no losses. I don't even know some of these companies. Biogen, 4 wins, 1 loss, 27.8%. Sure, I like all these numbers. These are great. I'm looking at the average trade return, right? That's what I'm judging this on. Regeneron, UNH, Eli Lilly, these are some monsters, right? It's great to see large companies. They tend to have bids, right? So you choose the ones you want. Okay, just check, check, check. Let me see if there's anything. A 0.5% average trade doesn't really interest me. Is there anything else? UHS, sure. X-ray, sure. Abbott Labs. Okay, so now I found some more. So I'll go to add alert, same thing. Everything's already done for me. And this is fade the dip plus AI. But this time, this is in healthcare. You don't have to put these notes. These notes are just to help you. It's to help, or to help me in this case. You don't have to put notes. You can just get the alerts. But I want to know what I'm looking at. I don't want to, before I click on the link, I want to help myself out. What am I looking at? Oh, it's fade the dip plus AI. Oh, it's in healthcare. Got it. Add the alert. 22 alerts were created. So that means in total, we've created 31 trades. And other than me just talking a lot, it didn't take very long. Okay. So I did not do tech this time. I did get my two industries though. I got healthcare and I got financials. Now I certainly could go through any other. I'm not going to go through all of these industries because at a certain point you guys are gonna be like, I got it, dude. But you can go through basic materials, industrials, energy could be an interesting one to do. Utilities could be an interesting one to do. Feel free, right? Feel free to do that. And maybe you're not convinced you don't want tech. That's the NASDAQ 100. Maybe you want to try a certain kind of tech, like software, right? So that's how you would do it. So hopefully what I've done today so far is showing you how to choose a strategy that you want to backtest. You choose anyone you want, right? They're in here. Okay. Understand what the trade is. It's a short put spread. It always skips earnings and has a very specific technical open. You can also read the technical open at the very bottom. Okay. There's some AI that's running behind it, two pieces of it. Found two sectors, discarded one, added, I think, a total of 33 trades or whatever it was. You know, guys, that's a process, right? What's the plan? The plan is when the stock crosses above the 200-day moving average from being below, and the stock is above the 10-day moving average, and the RSI means it's not overbought, and these two measures of AI check a box, I will sell a put spread, short a put spread, as long as it isn't during earnings, and I'll take a gain at 50%. That's called a plan. That's called the process. That's the first P I was talking about. You would think that would be good enough for humans, but it isn't. You will need patience and effort. But we've done a lot of it for you. The rest is on you. And no, it will not be easy. It seems like it should be easy, but it isn't. Because being a human being and being reactive, these are natural things. They actually protect us, right? What if we're driving and someone's trying to change lanes and they don't see us? We have to be reactive, right? That wasn't part of our plan. Our plan was just to drive. We have to be reactive. Okay, so this trade machine can't make it any easier on the process part, the part that should be the most important. We certainly take a lot of the effort out. I mean, you're just pulling drop-down menus here, guys. The patience part, you tell me, right? You tell me. All right, just so you know what's coming next week. So I'm done with my presentation. We'll do Q&A. Next week, or not next week, sorry, Thursday, we will go back to this strategy, CML spread the sell-off AI. Okay. I just don't feel like I covered it well enough. So if you do feel like I covered it well enough, you don't have to come on Thursday. Don't worry about it. You're not going to miss anything. I'm going to do the same spiel, just talk about this strategy. Various sectors, things like that. Okay. And then on this webinar, on this little live help, I'll tell you what's coming the week after. Okay. Please don't feel compelled to come to it. This should not be a burden to you. You shouldn't be like, oh my God, I signed up for TradeMachine and now I have to come to 2 videos a week. Not at all. Not at all. You will miss nothing other than how to. This is just how to. If that's helpful, great. If it's not helpful, don't let it be a burden. These are now recorded and they'll be emailed. I'm going to show you where they are. Okay. So 2 things I want to show you. First thing is where these are. So you go to the Learn tab. Amanda did something great. go to the Learn tab. Here it is, right here. Live help sessions for TradeMachine. Click on it, and the list is going to be growing. Soon enough, you'll see the 1226 one, the one today. Okay? That's how you do
Thank
it.
you, Amanda.
Yeah. So that's the thing. So don't feel burdened to do these, and please don't feel burdened that you have to watch them. The goal of this was not that you feel burdened that there's more homework to do. The goal was simply that you feel like you understand TradeMachine well enough to succeed, that you can become a successful trader. You do not have to watch these. I'm not giving away any secret sauce. Okay. When I do a webinar for all members, then it's something I really want everyone to hear. And you'll know when that's happening because it won't be a live help session. It's going to be a TradeMachine webinar with a very big purpose, and that's coming soon. Those you might want to watch or watch on the recording. These, really up to you. Please don't feel burdened that we're offering live help and therefore you have to participate. You do not. You do not have to feel burdened. You do not have to be here. The last thing I wanted to show you is in order to get to max every day and not on video, click on community. It's going to give you some rules of engagement, code of conduct. Okay. I'll let you read them on your own. You just click agree. By the way, this comes up every time. This is why our community is a place that is so lovely. This is why so many people come here. There's probably 10 or 20x as many people as you think on there. We have a lot of what I call lurkers. They're just reading. Okay. Not as many people are actually posting. But the reason this is a safe place, the reason people have left some other social media that makes them feel badly is because of this. Because I'm the judge, jury, and executioner, and there is no appeal. If I feel in any way someone is being denigrated or harassed, you're gone. And not only you gone, you're banned from all CML products for life. We will check your IP. We've had one user sign up with 8 different email addresses, and 8 times we've sent them the money back. This should feel like a safe place. Okay. Now, you say, well, how do I get Max? So Max is actually under the name Chat Uncle Pops. So do that, and then you say, hey, Max, I have a question. And here it is. And just off you go. Just ask him the question. Okay? And that's it. So if you don't want to join these live help things, you don't like video, whatever, just ask Max. All right, I'm going to now stop sharing the screen and we're going to do some Q&A, but I'm going to do it where you can see our faces. So I will come to Zoom. I will stop sharing. I will go to live video. Max, you can feel free to do so as well. And Mr. Max Katz, you're on.
Thank you so much. Can you come to any future dates that I might have and introduce me as well? That would be great.
That's right.
First of all, if Ophir reveals any secrets during these Zooms, I promise I will post them in community so everyone will know what the new secret is. Thanks for coming out, and let's get to the questions right away. Hopefully, I won't get too close to the screen. It's not a pleasant sight. All right, people are leaving questions in both chat and Q&A.
So please use chat, guys. So there's 4 in Q&A. We'll do the 4 later, but that's it. So just do chat. Go for it. Thanks.
All right. Good afternoon. Thank you. Did you hit record? Appreciate the presentation. Enjoyed watching the prior 2 sessions. Why is it in community chats you don't get constantly updated? I have to fool around clicking to see responses. Thanks. I greatly appreciate the webinar. All you have to do is click on new posts, right?
Right.
Or
notifications.
yeah. So I'm not sure. I mean, it is constantly updating. You don't see the update until you click on either that new post, home, or your notifications if someone's left something, alerted you, used your ID, and you'll see who is chatting with you. Okay, Ophir is the man. I look forward to next week when Ophir will be wearing his new sweatshirt, robe, whatever that thing is that he's wearing right now. Okay, if I see a stock going in a certain direction, how can I use TradeMachine? Which strategy would I use is it only for portfolios? No, no. Any of the strategies can be used on any individual stock. If you are bullish, look at the bullish strategies and see which one works best for the stock that you have in mind.
Let me share the screen for a sec. I can answer this one with one new technical we have. So let's just say a stock is going up. Okay. We'll go by ticker. Let's just say it was Microsoft. I don't care which ticker. This is just an example. And you're like, hey, man, the stock is ripping. And maybe all you mean by the stock is ripping, you mean one thing. You mean the stock is up 10% in the last week. I'm just going to make something up. Okay. So you can say stock move percent X days. So you can say in the last 10 trading days, the stock is up 10%. I feel like I got to get into this, right? So put that as your technical open. Okay. Make a strategy. In this case, selling a put spread would do great in Microsoft. Maybe you wanted to try just getting long a call. Okay. So do a call and you can get an out of it. Doesn't work, right? You can say, okay, well, what about a call spread? Like, oh, that works okay, but the return is bad. So far, when Microsoft is up 10%, I think I said, right? In 10 days, I would sell a put spread, right? So you can test whatever you want with whichever technical open you want. So you are not tied down to the strategies we provide. The strategies we provide are for convenience. You can do anything you like. Also, by the way, you can create as many portfolios as you like if you don't like ours. And you can save as many back tests as you like if you don't like ours. So.
Thank you. Great session, much appreciated. I asked support a couple of times for recording of the first session, but haven't received it.
You won't get it. Our first sessions were not for sharing. The
Right.
last two and this one are. It's not support's fault. It's my decision.
Yes, I was doing a bit too much rambling. I wasn't dressed appropriately. There were
Yeah,
lots of
it
reasons
wasn't
why the
just that. We
first
just
two.
weren't a final machine, right? Now we are. Now we kind of got our thing together. So no, it's not support's fault. I said no.
All right, regarding the 1/2 by 1/2 ratio trade, that has been replaced in the back tests with the 1-3-2, but it's the same concept, just a 1/2 by 1/2. It's relatively frequent for the following criteria to be met: price over 50 DMA, 50 SMA greater than 200 DMA, but it is much more infrequent for the 10 DMA to be less than a 21. I think the bottom line on this question is is it required that we have to use all the conditions that we see in either a pre-selected strategy or something that we've come up with for something else, for some other stock? And the answer, at least my answer, is back test it. Take those conditions out.
Yeah.
Rerun the back test. If you're happy with the results and you do, 3 years, 2 years, 1 year, like I like to do, or 3 years and 6 months, like Ophir recently likes to do, then it's an acceptable trade. Go ahead.
You're allowed to paint outside the lines in TradeMachine. The only thing we're making sure we do is that if you don't have time to paint outside the lines because you have, a real job, then we've painted a lot for you. But you can feel free to extend the capabilities to use up the capabilities of TradeMachine has 100 million X the power that I just showed you. But if I showed you 100 million X the power, half of you would say, dude, I got a job.
All right. How do we test the second group of 50 in the QQQ? Now, if you're a platinum user like Ophir, you get to see all 100 or 101 stocks in there because there's GOOG and GOOGL. But if you're not, and this came up in community today, if you're a regular monthly payment user, then you will see the first 50. And all you need to do, it's a little bit of a hassle, but you don't have to do it every time. You just have to do it once. Create your own portfolio with the second 50. All right. And if you if Ophir wants to show
Sure, I'll
the
show.
QQQ portfolio, and click on it, you'll see all the stocks that are in it. So
Yeah.
just count the first 50
So
that you're always going to see.
click at it. Here you go. These are all 100. What Max is saying
Right,
is, okay, if only does 50, count to 50. You want the other 50. So let's say it's these. So I'm just going to pretend it's these, right? I would just copy them. Oops. Okay.
right.
So you can see my right click, copy. Okay, no problem. I'm done. Now I'm in a portfolio, create a new portfolio. I would call it second half
QQQ.
of NASDAQ 100, and then bam. And now I have created second half.
There you
So
go.
that's how you do it. I'm now going to delete this because I don't want the second half, but that's how you do it. What was that? Did you see
I
the
don't
emoji?
know.
Did you
That
see
was
that?
cool.
That was,
Yeah.
how did that happen?
I don't know. I didn't know that was it's happening again. I didn't know that was a capability.
Uh,
All
I
right.
have no
So
idea how that's happening.
they love it. They love it. We're getting
I have to stop
accolades.
sharing my screen because I'm gonna totally lose it. I'm gonna
All right.
totally lose it. Okay. Okay.
So
All
if
right.
you're a platinum user, you're still on, by the way. You're still
Okay.
visible.
Oh, I know. I was just saying I
Okay.
had to
All right.
take off the shit screen share.
Oh, okay. If you're a platinum user, you get to see up to 200 stocks in a portfolio. We don't have, CML doesn't have any that are more than 200. So you'll see the entire portfolio if you're a platinum user. If you are a regular user, it'll only go up to 50. And then you have to, as Ophir very quickly just showed, create your own personal portfolio for the balance of the stocks. Okay, here's a very common question, and it's a very good question. Does the alert go out intraday if the conditions are met, or does it only happen after the close? So these alerts, they go out the first time during the day that these technical open conditions are met. I believe it starts a little after 10:30 New York time, Eastern time, when TradeMachine first starts sending out the alerts. Right now, it's the user's responsibility to double check any alert that you're thinking of taking a trade on near the end of the day. I do it starting at 3:30. I check those technical open conditions and make sure that they are still holding.
And a soon upgrade, you will see soon, is you will actually have this. You can go at 12:59 or 10:43, and it will tell you if a back test is active. And not only will it do that for you, it'll just tell you the trades, tell you the options. Right? If this is a 40-30 delta spread, it'll tell you short these, long these, active now. And when I say active, it's going to have a timestamp. It'll say, as of 11:45 a.m. Pacific time, this is active. And then you refresh, and at 12:34 Pacific time, it'll look like this. I mean, not it will. It could look like this. Pull it up.
Right.
It'll say
So if
not active.
something, right, if something is supposed to be
Yes.
above the 200, it's supposed to have crossed that day above the 200, and then it dips below, that alert is active, will go away.
By mid-January, and I'm going to run a whole webinar. That's when you'll hear from me for a big webinar. So that's coming very soon, and TradeMachine will check it instantly. Just every moment, you can check, and it will give you the options. So you're ready
Right.
to roll.
Okay, and someone agrees with us that they get the alerts during the day if there's a trigger. All right. Ophir said that we are limited to 50 unless we are platinum. That's correct. I'm an annual subscriber and getting different total results following your exact same search. Is there a typical solution to this issue? Yes. You probably don't have the same end date
Right.
as Ophir was using. That's the
Now,
first thing you need
remember,
to do is
remember what I
click on, in my case, in Ophir's
there.
case, we always start
Click
at the
3 years
3-year.
right here.
Click on that and it'll update the start date and the end date.
Yep.
All right.
And if you're still having trouble, you're like, it's just not matching Ophir's stuff. What you do is you get the backtest link. So you click this, copy the link, copy the word, and just send it to support. So just so you know what this does, that there's an individual link for every single back test in the history of TradeMachine and the future of TradeMachine. So it'll be specifically this test, and you'll say, I'm specifically running this, and it's specifically not working, or it's specifically not what Ophir said, and we'll look
Right.
and tell you, and we'll look and tell you why.
All right. And then one person is confirming that you were on the 3-year when you were doing your back tests, not the 1 year on healthcare.
Yeah,
I'm pretty sure that
that's
was
right.
the case.
That's right. Yeah.
All right. So if I look at only the defense sector, can I just put on a separate portfolio? Absolutely. You can build whatever stocks you want to put in a portfolio. It's all yours.
We offer you unlimited portfolios. You can have 300 portfolios. If you're a money manager, you have clients or whatever, and you want each of their portfolios, we have people who do that. They have each of their clients. Yeah, whatever you want.
Okay. What would you do if the PCS begins to go against you? PCS being the put credit spread. All right. So Ophir and I may disagree on this. We'll find out shortly. But if my short strike is breached, so in this case, if that short 40 delta put is approached, not even breached, I'm looking, and I put it on for an acceptable credit. I might look to roll down if there's enough time left within that current expiration, if I still want to stay in the trade, or I may look to roll the whole put credit spread out to a later expiration. If I still want to be in the trade. If I don't want to be in the trade, then I'm going to take my loss and move on to the next trade. That is, however, not what the strict technical open and close conditions of the back test say, but that's what I do.
Yeah, add your own personal flavor. What TradeMachine does is it just waits 30 days.
Right. It gives it the time allocated. If it's a 30 DTE trade, it'll wait all 30 days.
Unless it comes back and your gain is 50%, in which
Right.
case you get out.
Correct. For the fade to dip plus AI. Will you go out at 50% even if you see strong potential to the upside?
Personal.
So once again, personal preference. I would close the original trade and potentially put on a new trade. Book some profits. If I still see potential to the upside, I sell another put credit spread out 30 days. But a new trade, new expiration, etc. That's what I do. The XLV looks great for 3 years, but only 5% average trade for 1 year. How should we think about this multi-time frame? Okay, so I'll tell you what I do, and then Ophir will tell us the way it should be. I started 3 years. Let's say I'm looking at, I don't remember how many stocks are in the healthcare portfolio, but let's say it's double-digit average percent return. It's acceptable to me. I go find the top 10 stocks that I like the best with the best average return. Those are the ones that I use to do my 2-year back test and my 1-year back test. And if those 10 hold up, they become personal alerts of mine. So I don't rerun the entire portfolio for 2 years and 1 year if the 3-year results for the entire portfolio were good and easily acceptable to pick the winners from there. That's what I do.
I got some good news, Max.
You did?
Yeah.
Is
So
it related to this question?
No, so far 141 of my contracts, the market maker said, okay, they gave it back. I still
That's
have a lot more to
nice.
go. I
That's
still have a lot
nice.
more. Yeah, it helps to have just a little bit of pull.
All right, you'll be
Yeah.
able to sleep tonight.
Honestly, I don't feel like vomiting anymore. Now it's just a very bad trade, not the worst trade of my
Now,
life.
some people may have joined us after you shared your problem at the beginning of the session today. So you want to tell them what the problem was
I'll tell them at the
quickly?
end. Let's do Q&A.
Okay. All right. We'll get them to stay till the end.
Oh, thank God.
All right, someone is reminding us both that Amanda is totally awesome. I agree 120%.
That might have been the whole point of the webinar, to tell you the truth.
This is great. I've been a member for years and years and love that we will do this every week. Where do we find the recordings? I think Ophir has showed us where they are in the Learn tab. Okay, Max Ophir, here's where I am struggling. I am trying to embrace the power and plan of the back test and the trade while breaking away from my prior technical analysis. So do you take the trade machine alerts and put the trade through any other analysis before executing? I think that's personal preference. And it's whatever makes you more comfortable to potentially pull the trigger. I can tell you there's a number of people in community, I'm stressing community, you should check it out,
Please check
that
your video.
that start with the chart and then we'll look at the alert and then go back to the chart. And of course, Pattern Finder is great.
Yeah,
I
let me
use
just share
Pattern
that.
Finder to look at the profit and loss zone, potential profit and loss zones.
So let's say we thought maybe there was something happening in, can you give me something from the Today tab? Oh, I don't know why I just said that. I can just look at today. Sorry. So let's say we were looking at, since we're talking about fade the dip, and there is one today, it's IBKR. Okay, right? So,
Right.
and we're like, we know it meets all the criteria, no problem. Let's take a look at the chart. In Pattern Finder, I can pull up IBKR and see where we're at, right? This is all algorithmically done. The prices drive me crazy, so I actually turn the highs and lows off. If you're just saying I'm just taking the prices off, it just makes it too, I don't know, my eyes can't handle it. But what I see here, fade the dip is selling a put spread. I see support that, okay, resistance, 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 resistance turned into support, resistance. This line to me, oh, and resistance and this line to me, I like this. Now, Trade Machine would have to tell me to do it. But if I'm checking the chart, I don't see any reason not to do this. Now I see a reason with several times where this congestion line has acted as resistance or support 1, 2, 3, 4, 5, 6, 7, 8, 9 times. I'm feeling even better about this trade. Does that mean I won't lose? No, it doesn't mean I won't lose. But how would you use stock charts? This is how I would do it. If you're a Trade Machine member, you can get Pattern Finder, which is normally, I think, $800 a year. You can get it for $99 a year. We cannot give it to you for any less. So you just email support and say, hey, I want Pattern Finder.
Yeah. I mean, I'm a novice as far as chart reading, but Pattern Finder gives me trend lines and P&L zones, and that's what I refer to.
And you can use it as your own guide, right? So the stock right now is at 82.99 and looks like this resistance point is like 81.56. You might say if the stock hits 81.56, I'm getting out. I don't care what Trade Machine says. And alternatively, if the stock gets up to here to this resistance line around 89, I don't care if it's 30 days in or whatever. Like, I want to get out there. So you can create your own rules. Trade Machine is very specific and it's not ambiguous. You know the rules Trade Machine has. If you want to do more than that, of course you can, but you don't have to.
Yeah. Okay. We've answered another question, which was, I'd like to see how Ophir uses Pattern Finder to validate, invalidate a fade to dip strategy. So there you go. But that's personal preference. If you don't want to look at the chart, you just go by what the machine backtest indicates. Max and Ophir, what strategy should a beginner master first?
I actually have an answer for that, Max, if you don't mind. The 4 that I showed. So this was number 4. I'm going to redo number 1. I didn't do a good enough job.
Right. That was spread to sell out.
Yeah. But the reason is, it's not that these strategies are so brilliant, is that they cover everything I want in a market. You need to be able to know, you need to be able to have triggers when a market is falling apart and could be recovering. You want to do that both receiving a credit or and paying for a spread where it's a debit, and that's spread the sell off and buy the dip. So 2 different ones for the same situation, right? You want something that has to do with this pre-earnings optimism, right? Right. That's the diagonal that I showed last. What was that? Max, that was Thursday, right? Yeah.
Yeah.
right? So I want that's kind of an up market. And then you want one where it's a recovering market also, where a stock is starting to show strength, where you're also receiving another credit, and that's fade the dip. Those four across sectors get me kind of every kind of market. That doesn't mean that I've now found the holy grail for option trading. I'm just telling you that if you're like, hey, I really discourage people from having just one strategy. Having said that, I have seen people when I was a market maker who basically were good at one thing and one thing only, and they made millions of dollars. So bless them. I don't feel that comfortable in just one strategy. So I would say there's a reason I've chosen these four for the first four sessions. And
Right.
there's also a reason why I'm going to do the first one again, because I didn't feel like I did it well enough.
Okay. And I'll just add my personal preference. The strategy I actually like the best, and it happens 4 times a year for every stock, is the pre-earning long call diagonal. So
Yes, that's awesome trade. That's what we showed Thursday.
right. Okay. Uh gotta get I have to read a little more quickly. In the fade the dip example, if PFB is chosen, then what do we do? What type of entry exit? Follow the back test rules, etc. Um
I can show
the
it here.
okay, thank you. I'll just say that it's a close when you achieve your 50% profit limit, which is 50% of the credit that you sold the spread for, or the 30 days ends.
So here it is. Here's Pfizer. No wins. Well, it just doesn't matter. You're just picking. No, that's the wrong backtest. I wanted fade the dip AI. I'm sorry. I chose the wrong strategy. So fade the dip, let it load. Great. Go to your ticker, check if this person was asking about Pfizer, no problem. Look at the last 3 years, looking pretty good. Okay, so the question is, what do I do now? Like, yay, it's triggered. If it gets triggered, what do I do? It's a short put spread. It's short the 40-30 delta puts. So you're short the 40 delta puts, long the 30 delta puts. You're like, cool, what's that? Go to the options. And by the way, it's 30 days out, the closest to 30 days out. So you go to options chain. Soon you won't have to do this, right? Remember that picture I showed you? Soon we're going to do this for you. So as a stopgap for the next 2 weeks, okay, you go to the options that are the closest to 30 days from expiration. That would be 31 days. Okay. It's the 40-30 delta. So it looks like it would be selling these, right? Selling the 28 strike and buying the 27 strike. This is the closest to 40-30. As I said, I'll share the screen again. Very, very soon, we're going to take that off you. We'll just tell you. If you want to do this trade, it's not advice. We cannot provide advice. But if you want to, what we can do is share what the back tester is testing. So very soon you'll just get it. We'll do the work for you.
Right. And I use that as a starting point, but I'm always looking at the option chain myself and seeing if there are some IV disparities that I want to take advantage of in addition. Did the 1x3x2 butterfly give better returns than the 1x2x1x2? Yes.
And it's fewer legs. So smaller, less commission.
Right. It widened the butterfly a little bit at the beginning, et cetera, et cetera. The hardest part of following a TM trade is it contradicts the philosophy of keeping stops tight. When a lot of trades I've experienced drawdowns, then gains come. It feels like I'm having a hard time sizing up. All right,
Well,
there's a couple.
there's an alternative to size. Go ahead.
Well, I would say that keeping stops tight is not necessarily the direction that I would be going in. I would follow the rules of the back test that have validity, and stick to them.
Not just that. Options trading is speculative, and it's not for everyone. It doesn't mean you're not smart enough. That's not what I say. It's just personalities. It's like I don't want to jump out of a plane. Some people love jumping out. I mean, on purpose with a parachute. It doesn't mean that I'm stupid. I just don't like it.
Yeah.
Right. So options trading, there's great volatility in your trades. And that's why you want to have like a portfolio of trades, because the truth of the matter is one or two trades can go cuckoo. And they could go cuckoo good or cuckoo bad, but it's just not You
Yeah,
need to have
and
this portfolio of trades, right? Things are working with you and against you. You're diversified across your volatility positions. So one trade doesn't, none of the trades Trade Machine has are naked, or at least not naked to the downside.
and
So,
don't keep your size small on everything. If you keep your size relatively small, then no one trade can hurt you because you didn't have a tight stop.
and if you want bigger size, you can get a larger portfolio of trades.
Right. Ophir, it's 3:02. I have the time. I don't know if you do.
Let's just fit. How many questions are left?
I we haven't addressed the four in Q&A, and this is I don't
No,
even know where
you're
the end
done.
is.
You're done.
We're gonna
You just
stop.
said same entry criteria for 1 by 3 by 2. Yeah, it's. I think we're there. So the rest you can ask Max. Let's do the Q&A since they're there.
Okay. But please feel free to ask me anything in community.
Yeah, so I'll do these. So someone says, "Thanks, Max, for your expertise for this new service. Where can I find the link for the first 2 sessions?" You can't, so that's been covered.
Right. So that's been
Uh,
answered.
Here's where I'm struggling. I'm trying to embrace the power and plan of. Okay, I think this was asked in chat. Why do some strategies include AI and some not? Well, not every strategy. We haven't implemented our artificial intelligence on every strategy. Not every strategy has to be AI driven. I would take the power of AI. You can't replicate it anywhere. It's ours. But not every trade has to be AI driven, right? Sometimes there's just patterns that work, and you perhaps want to play along. So just that's why. On backtest tab, why is the S&P 500 not included? Because it's a 500 ticker bucket, and we only do 200 at once. Hypothetically, we could break the S&P 500 into 200, 200, 100. The
Yeah.
real reason I don't have the S&P 500 in there is because it's sector agnostic, and I'm the opposite of sector agnostic. I want to see how each sector is doing. I want to spread across sectors, and the S&P 500 is just so
Right.
that's why. You can
But
feel free to create the S&P 500 into 3 groups: 200, 200, 100 if you're platinum.
yes, but I want to say additionally, that doesn't mean you can do a back test on SPX. You
Or
can do
SPY.
back tests on SPY. There's nothing stopping you from doing that.
Yeah.
Okay.
Okay, and the last one is someone says, "Ophir, can you tell me what went wrong with your trade today?" Okay, so here you go, guys. This is humiliating. I was on the phone with my best friend this morning, and I was doing a trade at the same time. Just please don't do that. I know not to do that, and I did it anyway. I was just shooting the shit with my buddy. I was like, "Hold on, I gotta place a trade," and it was a few hundred lot. And I had a very specific limit that I was willing to pay, and the limit was reasonable. I wanted to pay 275. So I was doing like 250 options at 275, at 427. But the market was like $1 at 410. It was a very wide market. So, you'd never do market orders, right? Market orders are how you shoot yourself in the face. So I did it. I pushed limit. I put blah, 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 and I put 275. And I think what happened is that Schwab was like, "Hey, this doesn't trade in nickels, it trades in dimes." So I think I had to switch it to 280. So I thought I switched it to 280, hit review, hit send. I guess I didn't, and Schwab put it at 410. So I paid $1.40 more on 250 contracts than I wanted to. So I totally, totally, totally hosed myself. And the lucky was only $35,000. But if I was trading bigger, I could have cost myself $1 million because I was talking on my phone with my friend. That's just a terrible way to trade. Now it turns out 100 and so far, hopefully more, so far 141 have been reversed. So there's only 109 left, which means it saved me already about 60% of my loss because I went out to the market makers and I said, "Hey, I messed up. Can we undo this?" And they have every right to say no. Well, when I was a market maker and retail trader, I'm a retail trader now. When a retail trader asked me, it came through I always let them out. So this might be a little bit of good karma. So now I hope to get all of them out, but
Now, did your friend initiate the call or did you initiate the call?
you're looking to assign blame.
That's
He
great.
he messaged me and said, "Hey," and I called him.
All right. Because I was gonna say, you can't go to your friend and say, hey, we're splitting this error.
Oh, this was 100% my fault. He felt terrible. I was like, why are you feeling terrible? It's my fault. He didn't do anything wrong. I can tell he's my best friend. I can say, hey man, I gotta go. I gotta place this trade. I'm gonna call you back. And it was just, I was so sick to my stomach, and it wasn't the money. I just, it's such an amateur mistake. And good karma is making it so I only have 60% of the loss. So I'm only gonna lose. Maybe I'll get more. I don't want to jinx myself. Maybe I'll only lose 12,000, which for me is like rounding error for because of all the trades I have. Like I wouldn't even be able to tell. But yeah, it made me feel sick to my stomach. Like I was in a really bad mood when I started the session, and like seeing Max's face put me in a better mood. But like
I'll take that as a compliment.
it's really embarrassing. It's really embarrassing. So that's
All
it.
right, everybody, come visit me, community. Hope
And
you
you get
had fun.
you'll get the recording. Bye guys. Bye.
See you, Opie.